With the US government printing trillions and trillions of dollars, some people are wondering, can they really do that? Won't it cause hyperinflation? And what is the money backed by? Well, to answer that question, we need to go back to the last depression in 1929 when the first stock market crash happened. During that time, our money was still backed by gold. You could actually go to the bank, give them money, and then they would give you gold back in return. However, after the stock market crash, people started losing faith in our currency. When it seemed like the economy was not going to rebound as fast as they thought it would, people started turning in their money for actual physical gold or silver. This eventually became a problem as the government noticed that they didn't really have any more gold to back up their currency. And then all that they were left with was worthless pieces of paper, because there's no point in having paper if you don't have the gold to back it up. So, in 1933, they passed the Emergency Banking Act. This stopped people from trading their money for gold. So now the government protected their currency from becoming worthless because they still had the gold to back up their currency. However, this lasted until 1971 when President Nixon did something that would came to be known as the Nixon Shock. It's a real thing. Look it up online. But essentially what that was that the US just stopped paying gold to other foreign countries for their US currency. So back then, when foreign countries had a lot of US currency, what they would do was that they would give it back to the US, and then the US would give back gold in return, right? Because the US currency is backed by gold. But the Nixon shock stopped all that, right? They stopped giving gold for their US currency. So after the Nixon shock, our currency was no longer attached to how much gold we have at hand. And since then, our money is called fiat money. Right? It is no longer being backed up by the gold that we have in our Federal Reserves. It is being backed up by the US government and the trust that we have in our US government. What that allowed the US government to do was that it allowed the Federal Reserve to print unlimited amount of money without gold being backed up for their currency. Now, obviously, this can be very, very bad because if you have a printing machine, you can print out unlimited amount of money, it would cause hyperinflation and everything would be worthless if it wasn't controlled very well. But if it was controlled very well, which it has been controlled very well, then the Federal Reserve can have complete control over inflation rate, which can be a good thing if it is used well. Economists have agreed that you do not want deflation or even zero inflation. You actually want around 2 to 3% inflation rate because that allows businesses to better manage themselves in a crisis like one right now. Because of those inflations every year, some businesses are doing better than they would have if we had zero inflation or deflation. So the long answer to your short question is yes, the government can print out trillions and trillions of dollars. And yes, it can cause hyperinflation if it is not managed very well. But since no one is spending a lot, we might actually be in a deflation. So hopefully it balances out. Hopefully we can only trust that the government knows what it's doing. Okay, so now you may be wondering, if our money is not backed by gold, then does that mean that gold is worthless like other metals like aluminum or copper? The answer is no, it's not worthless. It is actually still the world's best form of currency and money. In today's fluctuating cryptocurrency prices and the government printing trillions and trillions of dollars, our currency is the least stable it has ever been since the Great Recession in 2008. It is so very, very unstable. And that is a very, very bad thing. An article from Forbes perfectly explains why when it says, ideally, a currency would be perfectly stable in value. The market economy is organized via prices, profit margins, returns on capitals, and interest rates. Changes in the value of the currency deranges this process, creating chaos and havoc. So you need your currency to be stable, because if it's not stable and it's constantly fluctuating, then you would have mass chaos. Right? What if one day a loaf of bread costs $3 and then the next day it costs $9? and then the day afterwards it costs 5. Like, that would be mental. But that is the way that cryptocurrency prices work. It changes so very often, and you have no idea when it's going to go up, when it's going to go down. And also, especially during a crisis like we're having right now, the government is printing trillions and trillions and trillions of dollars. What does that mean? That means that millionaires and billionaires are seeing their money losing value, because when there's more money into the economy, the money that they have is worth less. Something called inflation. I'm not saying that we have inflation right now because we're not spending anything, and that causes deflation. So hopefully the inflation and the deflation balances out, and we are right back where we should be. Well, if we can rely on cryptocurrency and our own government currency, then what can we rely on? That would be gold. We can always rely on gold. And President James Madison sums it up perfectly well. He says that the only adequate guarantee for the uniform stable value of paper currency is in its convertibility into species. Gold. The least fluctuating and only universal currency. It is the only universal currency, as well as silver. Right? Gold and silver is the only universal currency that we have. There have been so many people throughout the thousands of years that we've been alive trying to invent new forms of currency. But the only one that we still have that is still universal is gold, because it is very stable and it doesn't fluctuate like everything else. So how does this relate to investing in gold right now? Well, in good times, fiat money is actually very good. Fiat money allows our country to have a steady inflation rate, which is good for businesses and good for the economy. However, during a crisis, our currency weakens because one of two things. The first is that they exchange their money for gold, either in the country or somewhere else outside the country. The second is that the US government will print a lot more money, as much as it can, to help the economy. And when it pumps in a lot of money into the economy without any actual production being produced, that causes a lot of inflation. So if this continues for an extended period of time, then your money will slowly be worth less and less and less. Therefore, when the world is in a crisis like we are right now, I think that it is best that you have some form of your investment in gold or silver, whether it is the metal or the stock. What am I talking about? When most people think of investing in gold, they are thinking about investing in the metal. You take your money, you go to a store, and then you buy pieces of gold that costs X amount of dollars. And since this crisis began, the value of gold has actually shot up quite a good amount. How much so? Let's take a look. Okay, so this is goldprice.org. It tells you what the current price of gold is right now. It also has a track record going back to 10-20 years ago. So from here, you can see how gold has been fluctuating over time. Alright, so right now it's currently at $1,696. 6 months ago, this is a 6-month window in December. So 6 months ago in December, it was 1,460. If you look over here, that means that it has grown 17% in the last 6 months. 17% improvement is a very big deal. 17% is a good investment for anyone. Within a period of 6 months, 17% is very good. Now, what if you bought a gold company instead of the actual gold metal? Well, let's take a look. This is Newmont Corporation. It is the world's biggest gold mining business out there. The world's biggest. And let's take a look at 6 months ago. This is the graph for 6 months ago. 6 months ago, it was trading at $36.71. And currently, it is trading at $62.95. That means that it went from $36.90 to $62.90, which is a $26 difference. And that equates to a staggering 70% increase in 6 months. Newmont Corporation had a growth of 70% in the last 6 months. Why? Because they have a lot of gold saved up. And when you have a lot of gold saved up and the world is in a crisis and everyone wants to buy gold and it increases the price, your valuation goes up and your business skyrockets. Let's compare Newmont to another company. Let's say Amazon? Yeah, let's say Amazon, okay? Let's go here. Amazon. Okay, so in a period of 6 months, they both start at the same time. This here is Newmont. This here is Amazon. Amazon grew 34% in 6 months. Very, very good investment if you invested in Amazon 6 months ago. But Newmont got a 71.9 increase. That's double. That's a little bit more than double the growth of Amazon. Amazon, the company that is at an all-time high, the company that is pandemic-proof, is not as good as Newmont. Now, having compared Amazon to Newmont, I am not saying that Newmont has a better business structure and better business than Amazon. That is not what I'm saying at all. I'm just saying that Newmont is in a more favorable position than Amazon because of this pandemic. Because of this pandemic, gold has risen dramatically and it is doing very, very well. And due to this, Newmont is also doing very well. Now, you may be wondering, if Newmont is at an all-time high, then isn't it bad to invest in Newmont right now because it's already at an all-time high? Well, let me ask you this. How long do you think that the pandemic is going to last? Do you think it's going to last for the next month? If you do think it's going to last for the next month, then don't bother buying it and don't bother investing in Newmont. But if you think that it's going to last for the next 6 months, if you think it's going to last for the next year until the vaccine comes out, then maybe it might be worth your time to look more into it and consider investing a part of your portfolio into gold. Again, you can either invest in the physical gold or invest in a company like Newmont. But whatever you decide, I hope that you would really consider investing a part of your portfolio into gold. Alright, well, that is all that I have for you guys. Thank you guys for watching. I hope you guys are safe and healthy, and I wish you luck in your investment journey. I'll see you guys next time. Bye.